Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. We're getting to the end of the quarter, and that means that we're going to have to start thinking about what we're looking for from companies as they start to report numbers. One of the interesting companies right now is going to be Tesla. The stock is up sharply over the last few months, but there's still a lot of evidence that the problems that we saw emerge late in 2022 and early in 2023, namely price cuts and falling margins, continue to be a problem. So what am I looking for in Tesla's results and in their early reports that say how many vehicles were produced? That's what I want to get into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And let's get to the 3 questions that Tesla needs to answer. The first is about inventory. This may not be the first thing that you think about with Tesla, but inventory is becoming an increasing problem for the company. One of Tesla's differentiators is that it doesn't have dealers. That means that it can make the entire margin that is in the EV value chain, but it also means that it has to hold inventory on its balance sheet that isn't sold to customers. So any overbuilding of products can't be dumped off to dealers the way that a lot of legacy automakers have. They need to keep that inventory on the balance sheet. As a result, Tesla's inventory has actually shot up over the last couple of years, and it's starting to really eat into the balance sheet. You can see here that if this pace of growth continues, Tesla is actually going to go cash flow negative as it starts to use cash to put inventory on the balance sheet. As we're starting to see more things like vehicles being delivered from China to Europe, Canada, potentially even the US, that probably increases Tesla's use of cash for inventory. So exactly the pace of that change is going to be really critical to watch. A related thing, and the second thing to look at, is how much will Tesla actually reduce prices and give up margin in an effort to grow production 50% a year? One of my big takeaways from the last conference call is that Tesla, and Elon Musk specifically, is really focused on growing that production 50% a year and is happy to give up margin in order to grow production and grow sales. They went as far as to say, hey, we could sell a vehicle at a 0 gross margin right now because we'll be able to sell people FSD in the future, sell them software as a service. I don't know that I buy that thesis, but the near-term impact is going to be that margins are likely going to be down again in the second quarter after more price reductions hit in the second quarter than the first, and there was even price reductions in the fourth quarter of 2022. So how low are those margins going to go? How far is Tesla going to push it? Because I think eventually you get to the point where you can't grow 50% a year. It's not too long in the future, only about a decade in the future, that this pace of growth would mean that Tesla is making more vehicles than all automakers combined. So that level of growth is just not sustainable long term. But what's the balance there? How much is Tesla going to focus on growth? How much is it going to focus on margins? That's something I'm really interested to hear about in the company's conference call. And the third and biggest thing is how much demand is there for the Cybertruck? We've been hearing about the Cybertruck for years now. There's supposedly hundreds of thousands of people on the wait list. But as we have seen over the last few quarters, those waitlist numbers may not exactly be what they appear. Some of Tesla's competitors had really big waitlist numbers, but it's relatively easy to just cancel your order and not take delivery, especially for a vehicle like the Cybertruck, which actually had a very low cost to get on the waitlist. It wasn't $1,000 or more like it has been with a lot of other electric vehicles. So what does that end market demand look like? Hopefully we start getting some answers, because product should be coming off the production line sometime later this year. This is really the first new body style for Tesla. So it has to be successful, because if it's not, there's going to be a decade or more between major changes in the company's body style. Just historically, that's not been a successful strategy in the auto market, especially as so many other EVs are coming online. So these things all kind of play together. Rising inventory and falling margins show us that there's a demand problem. One way to fix that is to bring a new product to the market that has a ton of demand. But is that the case for Cybertruck? That's what I want to hear about. But what questions do you have for Tesla? Leave those in the comments section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.